In today's show, I'm going to be sharing with you a serious warning issued over the infamous $300,000 Bitcoin stock-to-flow price model. If you're not familiar with stock-to-flow, it has been the most accurate Bitcoin price prediction model in existence. It does predict a $288,000 Bitcoin price by the end of 2024 and a $100,000 Bitcoin price by the end of next year. However, we have influencers such as Alex Kruger who disagrees, as well as Corey Clipston and Dave the Wave. As I covered with you in yesterday's episode, Dave the Wave does believe the Bitcoin price will smash $500,000 within the next decade, but he disagrees that the Bitcoin price will cross $100,000 by the end of next year. So PlanB, the creator of the stock to flow, tweeted right here, okay, by December 2021, we will know then stock to flow greater than $100,000 as this model predicts, or if Dave is correct and Bitcoin closes less than $100,000 by the end of next year, well, guess what? That would invalidate the stock to flow model. And PlanB tweeted, high stock to flow equals high value. No math, no model, just data. Probably pure coincidence. I'll be breaking down this controversial Bitcoin price prediction model for you right here in today's show. Also, in today's episode, the Bitcoin active addresses shatters 1 million, hitting an all-time high as Bitcoin approaches a crucial monthly close. That's right, check it out. Bitcoin doesn't have to be complicated. The supply is capped and the number of users has been growing exponentially this whole time. We'll be discussing this here in today's show. Also, in today's episode, a new report details unprecedented levels of Wall Street interest in Bitcoin as well as cryptocurrency. That's right, this new report entitled Institutional Investors Turn Hodlers on Bitcoin Futures Markets. I'll be breaking down all the highlights for you right here in today's show. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, Chainlink, and all the major altcoins back in the green. But where's the Bitcoin price likely to go from here? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button, that's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below the video in the description. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. Let's kick it off by diving into today's controversial story of the day, a serious warning issued over the infamous Bitcoin stock to flow price prediction model, which predicts a $288,000 Bitcoin price by the end of 2024. Bitcoin is on track to be one of the year's best performing assets. That's a fact, despite a recent retraction, but that's not stopped the Bitcoin bulls from fighting on Twitter. The Bitcoin price has climbed through much of 2020, adding some 40% with the bullish stock to flow price prediction model that predicts a massive $288,000 Bitcoin price before 2024, working like clockwork according to its anonymous creator, PlanB. However, a number of high-profile Bitcoin analysts and entrepreneurs have clashed over the stock to flow model this past week, with the anonymous PlanB accusing his critics of trying to unmask him and his model derided as absolutely useless. The stock to flow model is based on the most fundamental errors which render it absolutely useless, warned Alex Kruger, an economist and crypto analyst, speaking over the phone. The stock to flow pricing model, created by the anonymous Twitter user PlanB, and calculates a ratio based on the existing supply of an asset against how much is entering circulation. Commodities such as gold, with the largest stock to flow ratio of 62, ultimately meaning it would take 62 years of gold production to get the current gold stock to have a higher stock to flow ratio, and are valued by investors for their scarcity. Silver has a stock to flow ratio of 22 years for its production to reach the current silver stock. Now, Bitcoin's stock to flow ratio is now 50, following Bitcoin's third halving earlier this year, which saw the number of the Bitcoin rewarded to those that maintain the Bitcoin network called miners cut in half, dropping it from 12.5 Bitcoin to 6.25. However, Kruger, along with many other analysts in recent months, have warned the model is based on faulty comparisons and a spurious relationship between price and scarcity. He goes on to share, the whole model rests on the wrong assumption that there is co-integration between price and scarcity, Kruger said, who explained that without co-integration, it's nonsensical to think that Bitcoin stock to flow, a number that goes up programmatically, and everybody knows that it will be at any point in time, can be used to predict price. Criticism of the stock to flow model and its creator have bubbled up just recently, with the chief executive of Bitcoin buying app Swan Bitcoin, Corey Clipston, posting what PlanB considered to be identifying information on Twitter before deleting it and saying he was wrong to post any personal info about PlanB, and adding anonymous Bitcoin users should have the right to stay anonymous. I agree. Let me know your thoughts in the comments below. It's extremely important to be bullish for the right reasons, Clipston said via Twitter, explaining his opposition to the popularization of the stock-to-flow model. Otherwise, you'll have weak hands when your belief is proven false. Clipston, speaking via Telegram, said he supported the stock-to-flow pricing model until just a few months ago, when he looked into the models and realized they're invalid and have zero predictive power. Now, according to PlanB, who has disputed the info posted by Clipston, the stock-to-flow price shows Bitcoin will reach $288,000 before the next Bitcoin halving in 2024. PlanB has also argued that the assets that have a high stock to flow have high value, pointing to gold, silver, diamonds, and real estate in a chart posted on Twitter. As we can see right here, high stock to flow equals high value. No math, no model, just data. Probably pure coincidence. And checking out Corey's response right here, he wrote, "It's bad math to cherry pick one data point for the other assets. Stock to flow has no direct relationship with gold's value over the last 115 years, as can be seen in the scatter plot below. Gold's market cap held valuations between 60 billion to 9 trillion, all at the same time the stock to flow value of 60. Now check it out. PlanB responded, "Corey, please stop trolling me. You put 50 plus comments under my tweets this weekend. You have your own Twitter feed and Swan platform where you can educate people and sell your stuff. My followers are 92% bullish, 72% strong hands, 64% Bitcoiners, and don't seem to like your trolling." And Corey responded, "My comments were primarily in response to points made by others. I'll continue to engage on the topics as needed. I've seen far more positive responses than negative, and my DMs are flooded with supporting messages. Turns out Bitcoiners like truth even more than hopium." And PlanB responded, "Blocked. Noise control." So there you have it. Meanwhile, PlanB has played down the potential accuracy of the model, saying earlier this year, "A model is a simplification of reality, and all models are wrong, but some are useful. All I know is this: I greatly appreciate PlanB and his stock to flow model, as well as all his hopium and all his tweets. And I also believe the Bitcoin price is likely to cross $100,000 by the end of next year, as the stock to flow model predicts." But let me know your thoughts in the comments right down below. Who's right, Corey or PlanB? Alex Kruger or PlanB? Dave the Wave or PlanB? Let me know your thoughts in the comments below. Now, elsewhere, others have supported PlanB's modeling, not as a price predictor, but also as an observation of a trend. And now checking out this tweet from the Blockstream CEO, Adam Back, who many believe is the real Satoshi Nakamoto. And regarding to the stock to flow, he wrote this: "In my opinion, one should think about stock to flow model like Moore's law. It's just an observation and speculative projection. An observed trend may continue. Moore's law projected the number of transistors and microprocessors would double every 2 years. The stock to flow model's predictions should not be relied upon as an exact estimate, according to Bitcoin analyst Nick Emblo, who shared via Twitter right here. What the model does do is give us some evidence to show stock to flow is an important variable in understanding Bitcoin value. Touche." However, critics of the stock to flow model, including Alex Kruger, aren't convinced. However, the beauty of the model is that it's open-ended, said Kruger, who fears PlanB's stock to flow analysis will be used to convince people to invest into Bitcoin with the promise they can't lose their money. You can't just keep pushing the deadline until you find what you're looking for. And he goes on to share, "True believers will hold their Bitcoin no matter what. There are others that will get wrecked when the model is completely off, trying to recoup their losses." So there you have it. Let me know your thoughts surrounding the bullish price predictions of the stock to flow model. Do you agree that the Bitcoin price will close at $100,000 or greater by the end of 2021 and hit $288,000 by the end of 2024? Drop me a comment right down below. And now checking out Dave the Wave's tweet, "If the current market represents 2.5%, then that would put the price at $500,000 per Bitcoin with 100% adoption. This is the S-curve," and he's referring to Willy Woo's bullish metric, which he shared just the other day, which shows us innovators are the first 2.5%, then we have the early adopters, which are 13.5%, then the early majority, which is 34%, followed by the late majority of 34%. And by that time, we can expect a $500,000 Bitcoin price or more. And before I break down our next story of the day, the Bitcoin active addresses shatters 1 million as Bitcoin approaches a crucial monthly close. But first, let's take a look at the overall crypto market. As you can see, a sea of green, which I love to see. Bitcoin up about 1.5% for the day, trading above 10,800. We have Ether up 3%, trading at $367. Chainlink up 4.7%, trading at $10.31. XRP up 1.4%, trading just above 24 cents. We have BNB up 1.5%, trading just below 29 bucks. We have NEO up 5%, trading just below $20. All right, the Bitcoin active addresses shatters 1 million as Bitcoin approaches a crucial monthly close. That's right, Bitcoin fundamentals continue to show signs of strength. According to the on-chain data provider Coinmetrics, the number of Bitcoin active addresses have soared to a level not seen in over 2 years. Hans Haj, the head of quant strategy at this crypto asset management firm, published a Coinmetrics chart highlighting the sustained growth of the number of Bitcoin active addresses over the 2 years. Let's check it out here on Crypto Twitter. Bitcoin doesn't have to be complicated. The supply is capped and the number of users has been growing exponentially this whole time. Analysts use the active addresses metric to measure the rate of crypto's asset adoption. The metric refers to the number of unique addresses that are active on the network as a sender or receiver of the crypto token. On September 25th, the number of Bitcoin active addresses skyrocketed to 1.14 million, the highest level since the 2017 bull market, as you can see right here in this graph. Now, the growth in user activity comes as Bitcoin continues to trade at around a key level for the Bitcoin bulls. The number one crypto is on the verge of closing the month above 10,500, and guess what? It did, which crypto strategist and trader Bitcoin Jack says indicates that Bitcoin is converting previous resistance into support. However, even though Bitcoin looks bullish on the long-term time frame, some analysts believe that Bitcoin is due for one more leg down in the short term. In a new video, trader Michael Van de Pop tells his crew of 78,000 that the number one crypto will likely breach support of 10,000 in the near term. He goes on the record to share, given that we've been making lower lows and lower lows, it's very likely that after this structure, we're going to break this low and then we get towards 9,600 and later on to hopefully confirm the end of this correction on the market, which would ultimately mean closing that CME futures gap, which is currently at about that $9,600 to $9,700 range. And before I break down our next story of the day, this report details unprecedented levels of Wall Street interest into Bitcoin and cryptocurrency. First, let's take a look at the overall crypto market. As you can see, the market cap sitting at 351 billion with 85 billion in volume in the past 24 hours, and current Bitcoin dominance is 57.5%. And now checking out the top gainers within the top 100, we have Celsius leading the pack, up 18% for the day, trading at $1.13. Ren up 17%, trading at 26 cents. Digibyte, go Digi. This has been soaring. I love Digi. I'm very bullish on this crypto. Let me know if you are in the comments below. Up 15%, trading at 2.8 cents. BitTorrent up 13%, trading at 0.0003. Below that, we have Maker, Ocean Protocol, Zcash, Waves, Algorand, and Monero. Let me know which altcoins in particular you're most bullish on right now. And now checking out the biggest losers within the top 100 in the past 24 hours. The Midas Touch Gold, which was surging just yesterday, now down 8%, trading at 2.8 cents. Energy Web Token down almost 8%, trading at $8.63. Below that, we have Theta down 5%, trading at 72 cents. Below that, we have Arweave down 3.8%, Cybervein, Golem, Nervous Network, and FTX token. And now checking out the BitMEX margins, we can see the bulls are back in control. Go Bulls. The bulls are leading with 61 million in superiority in the last 24 hours, with longs leading 52.6% versus 47.3% shorts. Let me know if you're currently bullish or bearish on the king of all crypto. And now checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated a 45 in fear. Yesterday a 49 neutral. Last week a 39 in fear. And last month a 75 in greed. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, which is precisely what Grayscale has been doing. They just acquired another 17,000 BTC on the low and now control approximately 2.4% of the overall Bitcoin supply in circulation. And when investors are getting too greedy, that means the market is due for a correction. All right, and before I break down our final story of the day and share with you this report details, which shows unprecedented levels of Wall Street interest in Bitcoin and cryptocurrency, entitled Institutional Investors Turn Hodlers on Bitcoin Futures Markets. First, I want to remind you to smash that show more button right below this video in the description. That's right, for a detailed analysis of what's going on in the market. This goes for all 550 plus videos right here on my YouTube channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video, or if you're listening or tuning in from a different platform, the direct YouTube link is cryptonewsalerts.net. You can also find us on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes, to Google Play, and even Stitcher Radio. You can also follow us on Crypto Twitter to receive daily crypto news alerts. My Twitter handle is cryptonewsyes. And for those of you active on Facebook, as I am, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, simply click this link, request to join. I'll be sure to plug you in. And to plug into my crypto Telegram chat, be sure to click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. All right, now let's break down our final story of the day. Institutional investors are increasingly basing their trades on the long-term outlook of Bitcoin and are no longer easily put off by price volatility, according to crypto derivatives exchange ZUBR. I guess we'll call it Zuber, in a new report titled Institutional Investors Turn Hodlers on Bitcoin's Futures Market, as I'll include in the show notes below the video in the description so you can reference it and check it out for yourself. And right now, here's some of the highlights. They analyze regulated exchanges like the CME and the BACT and compare their investment behaviors during the bull as well as bear markets. Zuber says that institutional traders on regulated platforms are looking to hold Bitcoin based on its long-term outlook, noting that there has been more open interest compared to volumes. They go on to share in this report, the writings might not all be on the wall yet for full-scale institutional interest, but there is a clear long-term interest in the crypto on regulated exchanges that has not been seen before. Trading volumes for Bitcoin's futures hit over 4 trillion in the past year, says Zuber, with average monthly volumes nearly 60% higher than the previous average of 2019. The surge in open interest is mainly seen on the CME, though the crypto derivatives company BACT is not trailing far behind. Now, Zuber believes that long-term interest in Bitcoin on regulated exchanges can further increase as more institutional investors enter the market. They go on to share, what is clear is that regulated exchanges have attracted a different caliber of traders to the market, potentially shifting the future dynamic of the cryptocurrency into what believers have wanted all along: displace gold. As we all know, once the Bitcoin market cap flips on the gold market cap, we can expect a $500,000 Bitcoin price, as the Winklevoss twins made the case for a $500,000 BTC. Let me know your thoughts in the comments right down below. And now for a quick recap of what I covered with you here in today's show. I shared a serious warning issued over the infamous Bitcoin stock to flow price prediction model, which predicts a $100,000 Bitcoin price by the end of 2021 and a $288,000 Bitcoin price by the end of 2024. I shared with you all the controversy surrounding it, and I also shared with you here Bitcoin active addresses shatters 1 million as Bitcoin approaches a crucial monthly close. As you can see right here, Bitcoin doesn't have to be complicated. The supply is capped and the number of users has been growing exponentially this whole time. That's right. Also, in today's show, I shared with you a new report which details unprecedented levels of Wall Street interest in Bitcoin and crypto. This report can be found in the show notes below the video in the description. So where do you feel the Bitcoin price is likely to go from here? Drop me a comment right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right. And turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, if interested in tapping into OPM, leveraging other people's money to grow your wealth and crypto portfolio, then smash that link right below this video in the description and register for this free system entitled OPM Wealth. You'll be glad you did, and I look forward to seeing you in tomorrow's episode. Peace.